Good afternoon, everyone. Welcome to today's daily recap. I'm Evan Lazarus, CEO of T3 Live, filling in for Scott, the Red Dog Redler, on this Friday afternoon. What a week it's been. The market really just, I think, as the market does from time to time, had its way, and what was a week that started out pretty ominous and scary ended post-Fed. Pretty wild, and right back to highs we go. If we take a look at the spiders here, and again, I kind of touched on a lot of this, especially this pattern this morning. Market snapping back, and I suspect and anticipate that the market may, continue to gyrate, for lack of a better word, into the end of the year. I don't think this market's about being right or being wrong, or being bullish or being bearish. I think this market is all about, short-term trading. That's really what, I think the approach needs to be. I know people in the social media sphere and on TV love to talk about, things that are fairly irrelevant. And when I say fairly irrelevant, they focus on, where the indexes are and new highs, and you get the panic talk every time the market turns down, and then you get the jubilation, every time the market turns up, and everybody's so concerned with who's right and who's wrong. And the reality of it is, smart money should be concerned with how to make money, not necessarily being right or being wrong. And I think that's really the sentiment that I want to convey in my little time here on this video is there's opportunity in this market, and it's not about saying, oh, look, the market went up, or look, the market went down. It's finding low-hanging fruit opportunities and turning them into alpha generation scenarios, so that you can approach a trade, step into a trade, watch it go, and get out, and do it wash, rinse, and repeat. That's kind of the approach that I think works best in these markets. While it's nice to have a long-term outlook and to call yourself a bull or to call yourself a bear, the people that are making money in this market are I think, more calling themselves opportunists. And I suspect it's going to maintain, this volatility, this violent price action. Volume, levels are pretty high. Relative to where they've been, and we've seen now, 4, 5, 6 days of some pretty good volume trading, which is good. That there's liquidity, there's opportunity, there's things going on. And it's funny, I was talking to somebody today, and they said something that resonated on me, and they said, when the markets are really slow, all you want is for them to move. And then when the markets are moving and they're volatile and violent, all you want them to do is slow down. So it's funny how the grass is always greener on the other side, but for this type of environment right now, you have to really know where you want to be. You have to really plan your trades. You don't have the luxury of making a mistake, because a mistake in this type of environment can be a very costly mistake. There's mistakes where you can get out of with and really mitigate the damage. But making a mistake in this type of environment can be very costly, because, as fast as this market can be, as fast as we can go down is as fast as we can go up, and as fast as all of a sudden we're sitting back at highs, come Tuesday, Wednesday next week, we could be back down here. So it's all, everything is open for possibility here. So that's kind of my 2 cents going into the weekend, and my weekend. My weekend download for you guys. Think about how to approach the market, and how you're going to make money in a market that does have this type of volume and this type of speed attached to it. That these are view it as a positive, not a negative, and try to stay focused on what price is telling you, not what headlines are telling you, because headlines can really ruin you. I've seen it happen before. As far as the actual stocks go, it is still, to me, it's still a mixed bag. Apple, you would think would be back closer to highs. but not really. You got a little bit of a gap up today yesterday and today. Not really doing much, actually kind of peaking intraday and closing on its lows. So we'll see what happens here. I'd say this is a fairly weak looking bounce here in this big cap tech name. IBM on the other side, I talked about it this morning. IBM, which is really a very, very ugly looking chart, bigger picture, clearly breaking down IBM and snapping back a little bit over the last 2 days, but overall still a very bearish trend here in this name. But we are seeing some stocks, obviously with the market back at highs, snap back. I talked this morning about Amazon. Amazon once again didn't really do much today, but certainly no buyers stepping in here. So I think it's when you're doing your work over the weekend or you're thinking about next week or where you want to be, ask yourself the question, is my stock overperforming, underperforming, or really doing nothing? Because you really want to, stock selection is really, really crucial in this type of tape, where you can, in genuinely bullish environments, you can get away with, throwing money out there to stocks, and the market tends to carry those stocks higher. This is not that environment. This is a trading, a hardcore trader environment right now, where you have stocks that are breaking down, you have stocks that are snapping back, you have some stocks that are still, teetering on new highs with good, strong uptrends in place. You really do have a very, very mixed bag. You have commodities that are, still relatively, weak. Here's gold, really not doing much. Here's a weekly, still very bear flag looking here. You can see, gold continues to, build out these very weak looking, patterns. You have oil, energy and oil, OIH. Buyers stepping in a little bit here, but still clearly there's a lot of damage that's been done, and I would watch to see if in some of these oil and energy names, if we can pull back and make a higher low, you could see another trade possibly back into this more substantial resistance area. So I would watch some of these names going into next week for very very short-term tactical type of trades. So you have to do your homework in this market. Like I said, you don't have the luxury of just being a bull and just being net long or being net short in this market. You have to know your prices and you have to know when to get in and when to get out. And if you can do that and learn to do it well, regardless of a bull market or a bear market, you're gonna wind up being a good trader. I don't have too much to talk about outside of that. Bonds, TLTs, been a nice move here over the last last week or two, back at highs, right? Piercing that prior high, pulling back. Looks to me like this, will go higher based on, sort of pattern after this, big, rounding under move. This to me suggests that, these bonds still have more upside left in their tank. So keep an eye on treasuries in the days and weeks ahead. Could be an interesting story that plays out there. Obviously, the market doesn't care much about, sort of geopolitical headlines. It's all about the Fed. And the Fed rules, and the Fed continues to rule. What was all the rage and all the chatter come late last week and early this week with Russia and the dollar and the currency, we went straight into Fed, and the market was primed. It was almost too primed. We pulled back, and as soon as that Fed meeting was basically done, the rocket ship took off once again. Again, most of those gains coming overnight. You can see. This was, I guess, Wednesday price action, and then, gapping up and over the next day or so, starting to trade higher. So we'll keep an eye. Markets back to, resistance levels. The market's going to do what the market's going to do. So that's why I keep emphasizing making sure you have a good plan. Right back into the area from which I guess, you could say we broke down back in here, these highs from just a couple of weeks ago. So it'll be interesting to see what happens next week. we have a short holiday week next week, and then you go right into New Year's. So, sometimes less is more, especially going into the end of the year. I've said it a couple of times. Typically, this is when, volume really tends to diminish. But, now that we have, some pretty wild gyrations happening, I would say, I could be wrong on that. We could end the year with, continued volatility and continued, zigzags here. So we'll continue to monitor the story and evaluate on a, at this point, a day-by-day basis. It's hard to really make any long-term calls. I still think, the market's going to have a tough time, at prior highs. And the fact that, we basically have, screamed all the way back in what was, about an hour and then an overnight session, to me is not the most bullish price action, although price has gone up. The nature of which this whole thing happened, to me, doesn't speak volumes about, more upside. The preferable method, if this market was truly, bullish, would have been to, build a nice base and then, start to leg up from that base. This is a much more bullish, constructive pattern than just, gapping up and trading higher. Not believe it or not as bullish. So we'll see what happens into next week. I'd say, keep an eye on today's low. Today's low could be a short-term, barometer, and today's high for either more gains or a trade back down. You have this open gap here from 2 days ago. So there's, like I said, the market can continue to, ebb and flow here, and one day be strong and the next day be weak. And so you got to protect. And like I said, make sure the stocks that you're trading or you're focused on, are the stocks that represent, good quality opportunities. All right, everybody, have a wonderful, wonderful weekend, and I will hopefully speak to you next week.